before you click buy or sell, ask yourself this. Are you following the market or following indicators that follow the market? Most traders think they need more tools, more signals, more confirmation. But what if less is more? What if one candle, yes, just one, could teach you more about the market than 10 indicators ever will? Stick with me for the next few minutes. By the end of this speech, you'll understand why many traders are trapped not by the market, but by the illusions they've built on their charts. If you're ready to simplify your trading and sharpen your edge, hit that like button, subscribe to Whispers of Psychology, and let's dive into the truth. The modern retail trader's chart often looks like a Christmas tree, flashing signals from multiple indicators layered over one another, each offering conflicting advice. There's RSI in the corner screaming overbought, MACD lines crossing like wires behind a television set, and a Bollinger Band expanding as if it's predicting some great breakout. The trader, caught in this jungle of data, freezes. Do they buy? Wait? Sell? Add another indicator to confirm the others? This is illusion, the illusion of control. Indicators are not evil. They are tools, but tools with limitations. At their core, most indicators are derived from price. And not even current price. They are based on past prices. Moving averages, for example, smooth out price action over a period of time. That sounds useful, until you realize that by the time an indicator tells you something significant, the move has already happened. Let's say you're watching the RSI. It finally drops below 30, a classic oversold signal. But what caused that drop? It wasn't RSI deciding the market is oversold. It was the price dropping. RSI reacted. You're trading on a reaction, not a real-time insight. You're reacting to the echo, not the shout. This creates dependency. Traders start relying on indicators to tell them when to feel confident. RSI and MACD are aligned, so I feel safe entering this trade. But that safety is an illusion, because next time, when those indicators disagree, confusion sets in. You begin second-guessing. The very tools that were supposed to guide you now become a psychological crutch. Worse, some traders believe that more indicators mean more certainty. So they add layers, Fibonacci levels, Ichimoku clouds, volume profiles. But the paradox of choice kicks in. The more information you have, the harder it becomes to act. Your clarity gets replaced with chaos, and chaos breeds hesitation. What most don't realize is that the market doesn't care about your indicators. It's not driven by them. The market is driven by human behavior, emotions, herd instincts, news catalysts, institutional positioning. Price is a reflection of that collective psychology, the raw truth of what buyers and sellers are doing in real time. Indicators are just approximations built on top of that truth. So when you rely too heavily on indicators, you're trading a version of the market that's already behind. You're using the rear view mirror to drive forward. And in doing so, you lose the most important advantage a trader can have, the ability to respond to now. Some of the most consistent professional traders strip their charts of everything but price and volume. Why? Because they've learned that clarity comes from simplicity. They don't need 3 indicators to tell them what price is doing. They read the chart the way a psychologist reads microexpressions, with experience, precision, and patience. Now imagine this. You walk into a room and a friend says, "Look at that candle." It tells you everything. No RSI, no EMA, just one candle. At first, you might laugh. How can one candle give you more insight than all those complex tools? But that candle, say, a strong bullish engulfing bar at a support zone, might be showing you something real, a shift in market sentiment, a rejection of lower prices, a clue that buyers are stepping back in. But most traders miss this moment because they're too busy waiting for 5 indicators to agree. The truth is, indicators aren't evil. They're just misunderstood. They were never meant to replace your judgment. They were meant to support it. But the moment you let them drive your trades, you lose touch with the market itself. What you need is presence, awareness, the ability to see price for what it is, psychology in motion. When you remove the distractions, you begin to feel the market again. You're no longer reacting to flashing signals. You're anticipating behavior based on real-time data, price action. You begin to recognize how the market breathes, when it's anxious, when it's confident, and when it's lying. And that awareness, not RSI, not MACD, not your favorite combo of signals, is what separates noise from knowledge. So the next time you look at your chart and feel overwhelmed, ask yourself, is this complexity helping me see clearly? Or is it just making me feel like I'm in control? Because control isn't in the tools, it's in the mind behind the tools. Forget indicators, not forever, but for now. Let your chart breathe. Let your eyes focus on what matters most. Start with one candle. Start with one truth. And build your edge from there. The market is a language, and candlesticks are its words. While many traders look for confirmation from tools and complex indicators, they often overlook the rawest, purest form of price communication, the candlestick itself. Among the clutter of technical overlays, there's a quiet power in learning how to read a single candle. Not just see it, but truly understand the psychology behind its shape, size, and location. One candlestick in the right place can reveal more than 10 indicators combined. It captures a battle between buyers and sellers condensed into a visual story. A long wick on the top of a candle isn't just a random spike. It's the footprint of rejected prices, the evidence of failed momentum, of buyers losing strength and sellers stepping in. A small body doji isn't just a neutral signal. It reflects indecision, a moment of psychological pause in the market where neither side is in control. A large engulfing candle, where the current candle completely consumes the previous one, is not just a pattern. It's a power shift where control passes visibly from one side to another. That one candle is not just a shape. It's emotion, it's hesitation, it's confidence, it's fear, it's greed. Let's zoom in on one common example, the bullish engulfing candle. At a glance, it may seem like just a green candle following a red one, but think deeper. The market opened lower than the previous close. Bears thought they were in control. But as the session progressed, buyers not only fought back, they pushed the price above the previous candle's high. That's not just a candle. That's a psychological event. It signals that bulls have reclaimed power, perhaps a key support level, and that a potential reversal may be underway. You don't need MACD to tell you that. You don't need RSI to confirm it. The candle told the story. But the real power comes when this one candle appears in context. A hammer forming after a strong downtrend at a historical support zone carries vastly more meaning than a hammer floating randomly in the middle of a sideways market. Why? Because now it's not just a candle. It's a message in a conversation. A candle forming at a place where price previously reversed carries memory. It reflects a collective psychology of traders who remember that level is important. And when a powerful candle appears there again, it triggers instinctive responses in market participants. This is why blindly memorizing candlestick patterns doesn't work for long. The same pattern means different things in different contexts. A shooting star at resistance may be a sign of exhaustion, but a shooting star in the middle of a breakout may just be a pause before continuation. One candle teaches you this, not just by its shape, but by where and when it appears. When you shift your focus to reading that one candle, something else happens too. Your mind slows down. You stop chasing trades based on lagging confirmation and start anticipating behavior. You begin to understand what price is trying to do rather than just reacting to what indicators say it has done. That's the beginning of developing trader intuition, an inner compass built not on calculation, but on understanding. And it's a skill that compounds. When you train yourself to pause and analyze what one candle is telling you, your ability to spot false moves, traps, and real opportunities sharpens. You begin to recognize when a breakout is weak, when a reversal is fake, or when price is simply hunting stop losses before moving in the real direction. The beauty of this approach is that it simplifies your trading screen and intensifies your focus. Instead of 10 conflicting signals, you're asking just a few deep questions. Who's in control, buyers or sellers? Is this candle confirming strength or showing hesitation? Is this move supported by a logical level or is it noise? Answering these questions doesn't require fancy software, just presence, patience, and a trained eye. Most importantly, this approach puts you back in control. You're not passively waiting for an indicator to blink a signal. You're actively interpreting the market. You're thinking like a trader, not reacting like a machine. And that shift from dependency to interpretation is what elevates you from a beginner to someone who trades with intent. Remember, one candle can't tell you the future, but it can teach you how the market is behaving right now. And if you can learn to master the now, you'll always be one step ahead of those still chasing confirmation. Forget the noise. Start with one candle. Learn its language. Study its context. Feel its psychology. Because when you do, you'll see the market more clearly than any indicator ever could. Trading is not just a game of numbers. It's a game of minds, your mind versus the collective market psyche. And the truth is, most traders don't lose because of poor strategy. They lose because of poor psychology. They panic when they should be patient. They chase when they should wait. And they second guess when they should trust. All of this comes from a deep psychological gap. A gap that no indicator can ever fill. But observing and understanding just one candle in the right context, that begins to close that gap. Think about what really happens when you analyze a candle at a critical level. You're no longer outsourcing your decision-making to some complex formula coded into an indicator. You're engaging directly with the market. You're watching how price behaves, how it reacts when it reaches support, how it rejects a resistance zone, how it hesitates or accelerates after a news release. That one candle, forming at the moment, becomes your live feedback system. In that moment, you're not waiting for confirmation from something else. You're watching price speak in real time. You begin to build trust in your own observations. That trust is psychological capital, and it's far more powerful than technical capital. It's the difference between freezing in fear and taking decisive action. The market rewards those who respond to it, not those who react from fear or hope. By training yourself to read one candle, especially at important levels, you're developing emotional discipline. You're saying, I don't need 5 things to agree before I act. I need one clean signal that makes sense in context. That takes courage. That takes inner calm. And that is what separates a scattered trader from a composed one. Let's take a classic example. A bearish pin bar forming at a major resistance level. Many traders would ignore it unless RSI is also overbought or MACD shows divergence. But if you're tuned into price action, you don't need all that. You see the story. Price went up, touched a level where sellers had previously shown strength, and immediately got rejected. The wick is long. The body is small. Volume spikes. That candle alone tells you that the buying power has dried up and sellers are stepping in aggressively. You don't need confirmation. You need courage to trust what the market is showing you in that moment. And when you act based on this, something powerful happens. You feel in sync with the market. You're not acting out of anxiety or desperation. You're grounded, calm, focused. This builds a feedback loop. The more you trust your observations, the more confident you become. The more confident you become, the less you rely on noise. The less noise you follow, the more clearly you can read the market. That loop is what creates a trader who doesn't just survive, but thrives. This approach also protects you from one of the biggest traps in trading, emotional overload. Most traders constantly jump from one system to another, hoping to find something that works. But deep down, they're just looking for psychological comfort. They want certainty. They want to feel safe. But the market doesn't offer safety. It offers probability. And learning to read one candle at a time teaches you to live with that uncertainty, to embrace it, to thrive within it. When you shift your focus from external confirmation to internal awareness, you stop being manipulated by every market wiggle. You stop overtrading. You stop revenge trading. You stop needing a green light from some digital assistant. Instead, you begin to think, what is the market trying to do here? What are traders feeling at this level? And how is that showing up in this candle? This type of thinking sharpens your edge. It slows you down in the right way. You begin to wait for the high probability moments. You avoid noise. You protect your capital. You play offense and defense wisely. And most importantly, you begin to see the market not as a threat, but as a conversation where one candle, formed with clarity and context, can be the voice of the entire market mood. One candle can say, buyers are done. Another says, bulls are back. Another whispers, the market is waiting. To hear these messages, you don't need a fancy tool. You need presence. You need psychological stillness. You need the ability to focus, even when your emotions want to react. And that is something no strategy, no signal, no guru can give you. It comes from learning to trust the market and yourself one candle at a time. So when you find yourself overwhelmed by indicators or confused by conflicting signals, step back. Zoom out. Ask yourself, what is this single candle saying? Who's winning this moment? Is the story of this candle matching the bigger picture? If it is, you don't need anything more. You have the edge, the psychological edge, the one that turns a student of strategies into a master of mindset. Simplicity is not just a trading style. It's a philosophy. In a world that rewards speed, noise, and complexity, the trader who embraces simplicity gains a profound advantage. Focus. When your charts are filled with 5 indicators, 3 oscillators, and a dozen different signals, your attention is scattered. But when you strip it all down and train your eyes to read just one candle in context, something shifts. You begin to see what others miss. You begin to feel the rhythm of the market. The truth is, the more you complicate your trading, the more room you create for hesitation, contradiction, and second-guessing. Every new tool you add is another voice in your head. One says buy, another says wait, another whispers maybe sell soon. But trading is not a democracy, it's war. And in war, clarity matters. Hesitation kills. The seasoned trader doesn't win by knowing everything. They win by knowing when not to do anything, and when to act with precision. That clarity often comes not from more data, but from less. Let's go back to the concept of one candle. A trader who understands price action can look at a simple pin bar, a doji, or an engulfing candle and immediately sense the shift in market psychology, not because they memorized a textbook, but because they trained their mind to recognize simplicity in motion. They've seen that candle form at key levels enough times to trust its signal. They've watched how the market reacts afterward. That experience builds conviction, and conviction leads to better decisions. Now contrast that with a trader who depends on indicators. They might see the same price action, but they hesitate. They wait for the RSI to confirm, then check if the MACD histogram agrees, and then maybe draw a Fibonacci retracement. By the time they decide, the move is gone, and when they finally enter, it's often too late, and they're reacting, not anticipating. The beauty of simplicity is that it forces you to take responsibility. You're not hiding behind signals. You're not blaming a false crossover. You're saying, I saw the market shift. I trusted my read. I took the trade. That kind of ownership is what makes traders grow. Simplicity brings you face to face with your own discipline, your own patience, your own mindset. It reveals your psychological strengths and weaknesses. Most new traders chase complexity because they think it equals expertise. They feel more in control when they have more tools on the screen. But what they're really doing is numbing their uncertainty. They're looking for certainty where there is none. But professional traders know that the market never offers guarantees, only probabilities. And in a world of probabilities, your best edge is mental clarity, not more confirmation. When you simplify, you begin to build internal discipline. You start noticing how often you overtrade. You realize when you enter trades out of boredom. You catch yourself before you revenge trade. That awareness becomes your real indicator, one that no platform can provide. Minimalism in trading doesn't mean doing less. It means doing what matters. Watching a single candle at a major zone is not basic. It's elite. It means you've tuned your eyes to the market's true language. And when you combine that candle with a key support or resistance level, a clean trend line, or supply/demand zone, it becomes a laser-focused signal. No clutter, no confusion, just raw, real information. Simplicity also creates consistency. When your strategy is clean and repeatable, you can stick to it without emotional drama. You know what you're looking for, and you know when it's not there. There's no need to force a trade. This discipline keeps you from over-trading, protects your capital, and builds a foundation for steady growth. And growth built on clarity is growth that lasts. Ask any professional trader their turning point, and many will say it was the moment they stopped adding and started subtracting. The moment they realize that trading is not about predicting the future, but about reacting skillfully to the present. And skillful reaction comes from seeing clearly. That clarity is born in simplicity. One clean candle, one key level, one strong reaction. That's all it takes. Every great trader eventually reaches this truth. The edge is not in complexity, but in simplicity applied with consistency. You don't need a perfect system. You need a repeatable process. You don't need to win every trade. You need to execute your edge over and over again without emotional interference. So simplify your chart. Focus on what matters. Train your eyes to see the truth in price, not the noise in indicators. Let the candle speak. Trust its message. Act with discipline. Because in trading, as in life, mastery begins when you stop chasing everything and start focusing on what actually works. In the end, trading success doesn't come from having the most advanced tools or the flashiest indicators. It comes from clarity. And clarity is born when you strip away the noise and start listening to the market itself. Not through secondhand signals, but through its most honest language, price. That one candle, simple, raw, and powerful, is not just a pattern on your chart. It's the psychological fingerprint of the market. It captures fear, greed, hesitation, and conviction, all in one visual. When you study it, not in isolation but in context, you begin to see what most traders miss. The why behind the what. You start to notice the real shift in momentum, the true turning points, the emotional story unfolding candle by candle. You begin to trade with awareness, not reaction, with confidence, not confusion. Your edge becomes psychological, built not on guesswork, but on presence. Simplicity is not a weakness. It's wisdom. So forget the illusion of safety behind 10 indicators. Trust your eyes. Train your mind. Focus on one candle and master the message it brings. Because in the end, it's not the tools you use that make you profitable. It's how deeply you understand the chart in front of you, one candle at a time.